Retailers held centre stage last week, and in the coming few days the corporate news flow will become a little bit more diverse, with a good smattering of macroeconomic updates thrown in for good measure. Top down, the big feature will be the latest monthly UK inflation figures on Tuesday the 16th of January, although do also keep an eye out for the monthly retail sales figures on Friday the 19th. On the inflation front, the headline Consumer Price Index, or CPI, rose by 3.1% in November, the highest figure since spring 2012. The Retail Price Index, or RPI, rose by 3.9%, and we can see both benchmarks here dating back to 2012. The CPI reading compares to the Bank of England's target of 2%, so Governor Mark Carney and his colleagues will be watching this with interest. For the moment, economies seem to be passing off the rising inflation as the result of short-term factors, weaker pound, higher oil price, and as such the consensus is for just one more interest rate increase of 0.25% this year to 0.75%. However, if wage growth was start to accelerate from its current 2.2% level, that could make things more interesting, and this chart shows wage growth and UK interest rates back to 2002. On the company front, 6 FTSE 100 firms are set to release results or publish a trading statement. They include materials and chemicals expert Johnson Matthey on Tuesday the 16th, minor BHP Billiton and luxury goods firm Burberry on the 17th, as well as Primark owner Associated British Foods, credit checker Experian, and Premier Inn to Costa Coffee company Whitbread on Thursday the 18th. But for me, the biggest potential source of a fuss in the week ahead is the fourth quarter and full year results release due from miner Rio Tinto on Monday, January the 15th. Shareholders got a bit of a rollercoaster ride in Rio in 2017, as we can see from the chart here, but the shares did end the year at a 5-year high, more than double where they were during the dark days of early 2016 when commodity prices were under pressure and the Sydney and London quoted giant cut its dividend for the first time since 2009. 3 things look to have underpinned this share price recovery in Rio. The first is a broad upturn in commodity prices. Copper's at a 4-year high, zinc at a 10-year high, palladium at an all-time high. Now, not all of those metals matter to Rio, but the Bloomberg Commodity Index of 22 raw materials is powering higher. This suggests investors are confident about the global economy and growth and can also see inflation coming. And producers of real stuff like Rio have tended to do well in such circumstances in the past, even if, we all know, history offers no guarantees for the future. The second reason is Rio Tinto's own self-help programme, which has helped it make the most of the higher commodity prices. The firm has cut costs, slashed capital investment and focused on productivity, efficiency and cash flow. It's also avoided the temptation to make any acquisitions, or certainly big ones, which is probably no bad thing, given how it mistimed and overpaid its deal for aluminium giant Alcan in 2007, with horrible consequences for its balance sheet, profits and share price. The third factor in the recovery is the balance sheet, in fact. All of this cost-cutting, capital discipline and improved profitability means that Rio is forecast to have net debt of just $4.3 billion by the end of last year, compared to $19 billion in 2012. Analysts at broker Jefferies are even forecasting a net cash balance sheet by 2019, and all of this is allowing the company to take its dividend higher once more, and also run a $4 billion share buyback programme in 2017, which some analysts may think extending to 2018. Now here's Rio's 10-year dividend history complete with forecasts, in pence, for the next 2 years. If these estimates are met, the stock offers a yield of 4.6% for 2018, based on a share price of just under £40. Now when it comes to the numbers, analysts are looking for an earnings per share figure of $4.72 against $2.84 a year ago, and a dividend of $2.37 a share. Watch out also for comments on any fresh buybacks from CEO Jean-Sébastien Jacques. In terms of Rio's operations, analysts will be looking at the capital investment budget, forecast to be $5.5 billion for 2018 at December's analyst meeting, and also for updates on the Amrun bauxite and Oyu Tolgoi copper projects in Australia and Mongolia's Gobi Desert respectively. As a final point going forward, this shows the expected profit split in 2017 between Rio's biggest products: iron ore, aluminium, copper and diamonds, and energy and minerals. As you can see, iron ore is the real driver of the group's profits, so keep an eye on that. Thank you for watching, and I look forward to seeing you next time.